Today I'm going to speak about the FANG stocks. Everyone is talking about rotating back into the FANG stocks, and today I'm going to explain to you the differences between all 5 of them. What's a good point to buy, or is it a time to buy these stocks, or perhaps even to take profit? So stick with me on this video. I'm going to give you the lowdown details into the technical analysis region that will benefit you in your research and your decision making. So see you soon. Welcome back to Family Investment. Today I'm going to speak with the FANG stock. So the FANG, when I say FANG, I mean Facebook, Apple, Netflix, Microsoft, and Google. I'm going to go into the deep technical analysis to see which one is the best time to buy after the drop last week towards the end of June, and what we should be watching out for. And I can say they are showing different trends, even though the market showing that it's starting to sell off, but showing different trends. I'm going to share that with you today with my findings that I have just trended out. So if you've seen my videos previously, this one here, I've been explaining to people that it's time to take profits off the recovery stocks and then start rotating your money into good quality companies, especially the FANGs. Today I'm going to just show you how are we getting in. So the very first stock that I'm going to speak about, my favorite among the lot, is Facebook. So Facebook on the closing on a Friday, it dropped about 7%. And 2 days before that, Facebook dropped as well from its all-time high. And now they're sitting about 216. So is it time to buy? For me, fundamentally, Facebook is a great company. Despite all the issues and all the scandals, Facebook has got the highest profit margin. Great generation of growth. No emotion, let's get to the technical analysis because this is what you want to see for this video. So as you can see on the technical analysis, you can see ever since mid-March towards April, there's a great bull trend on Facebook. You can see the line, it is way above its bullish trending line. And every time, if you see that little bird squiggly, it's the reversal. Every time there's a huge dip, on a bearish indicator, the next day it jumps up even higher than the day before. So as you can see, I can see trends of 1, 2, 3, 4 reversal. 4 reversal of occurrence every 2 to 3 weeks, and it gets higher and higher and higher. And then I noticed round about the June period, the same occurred, but it's starting to slow down. The momentum is starting to slow down. It did not jump as high, and then it's reached its resistance of $240 a share. And now, as we've seen the news this week, you have seen Facebook drop, I would say almost 10%. Almost 10%. Mark Zuckerberg dropped from the 3rd richest man to the 4th richest man in the world because of the campaign where companies are starting to boycott Facebook for advertising. It's a Stop Hate for Profit campaign where companies are just stopping, and then you can see a great bearish trend. Bearish trend is just gone through the trend line. There's one indication, trend line has been broken. And the second indication is the moving day average for 10 days and 30 days have just gone in a bearish model as well. So that's the second indicator that is a trigger for a bearish trend. Trend is broken a couple of floors down. So we're looking at the trend of it's going to break below, as it stands 216, it's going to break potentially below 210, 207, 202. It could potentially break into 199 territory if this goes really, really aggressive. Not just on Facebook, but on the market generally overall. So Facebook could even drop further. There's more likelihood, like I repeat myself, more likelihood of Facebook dropping further down into a bearish channel for the next couple of weeks, more than it reversing up to the bullish trend. So it's going to be depending on the news on how Facebook react to this hate for profit campaign that everybody is boycotting. And the other third indicator, as you can see, is the highest volume of sales of about 75.98 million seen at that indicator there. And the last time this happened was the data scandal back in 2018, and you see a huge drop. So this is not as high, but it's starting to see another bearish Facebook trend. It's going to be further drop. It's not ready to buy yet, but soon, if the stochastic indicator goes below 20, I think it's a good time to buy. And you know, how long will this last? We don't know. But again, For me personally, Facebook is one, their own long term, but Facebook I've seen over the years always buy on the dip and it will come back up and sell it off, buy on the dip, come back up. Long term holder own Facebook, but always buy Facebook on a dip trend. And I think it's coming. So guys, be ready. I'm excited. And put it on the radar, put this 3 floors alarm alert on your phone and be prepared to buy Facebook when you can afford to. Okay, so that's me for Facebook. The second one I'm going to be speaking about is Google or Alphabet. So Google is on a similar trend as well. Again, if you look at the chart, I'm not going to go into too much detail, but the chart indicates a great bullish regime since the mid-March. And then if you check at the 10-day moving average, 30-day moving average, and the trend line, it's finally broken the, it's finally broken the indicator. The high volume and the stochastic is starting to sell off. So it's similar to Facebook because they have similar market advertising business, and it's people are expecting Alphabet to be having the same impact because they're almost in the same region of business for business ads, and it looks like it's going down. It's slower than Facebook, but there's room for it to go further down or sideways. So is Google a buy? For me, Google is a hard one. I don't really want to buy Google because number one, they're really slow, and number two, they're really slow. I would only buy Google. That's what I've been doing over the years. I call it the $1,200 and the $1,300 mark. When it goes below 1,200, I buy it, and then when it goes over 1,003, I would consider selling it. If it goes higher, obviously I would consider selling. They're just floating between that band. That's the band. That's my trade band for Google. Great company, use all their products, you as well. But it's the trading band is just becoming too indicative, becoming too predictive. Okay, for the number three, everybody's favorite. Let's go to Netflix. We all love Netflix. I've never watched more Netflix ever since this lockdown. So Netflix is what I'm going to speak about next. So on Netflix, I'm just going to quickly say trend line, rubbish. No point looking at the trend line for Netflix because it's so volatile. It moves up so high and down so high. Even on the moving average, on the 10-day, 20-day, 30-day, 40-day, it's quite hard to try to catch the trend. It's just volatile. It goes really high, comes out really low. And then if you go, even the RSI, the stochastic, it's a bit fake. It's not really indicative of when to get Netflix. But long-term, Netflix will be a good company to own. But when is it time to buy? So instead of looking at the trend, there's one trend that I'm looking at. It's called the bullish engulfing candlestick. If you look closely, I have pulled it with the comment clock button. Buy. See, 1, 2, 3, 4, 5. 4 of them that happen every time there's a huge dip, every time there's a huge sell-off. It's accompanied by a huge buy the following day or a couple of days later. So this is a bullish engulfing trend where you see a huge red candlestick down and an equivalent one next day on the upside. And then it brings the gradient up again. And yes, in effect, this happened on Friday. So, the past doesn't indicate the future, but it looks like a trend that maybe there'll be a couple of days more sell-off, or maybe on Monday, Tuesday, you see a bullish engulfing trend upwards. And the other theme to support is America is going into an extended lockdown. Potentially people are still locked in, people are still watching Netflix. So, investor will be pouring money in. So let's watch it. But as the last 4 times this happened over every half month, it looks like it might happen the 5th time or may not. But this is the trend I'm seeing, so I'll let you indicate when the market opens next week, and let's see and how strong is the momentum left on Netflix. How much more can Netflix push? Next one I'm going to be speaking about is Microsoft. As you can see in the video that I've shown you, Microsoft was my recommended only resilient stock. Good days they'll do well, and bad days they'll do well. Microsoft is a resilient company. Okay, I'm not going to go into the fundamental details, but I'll just talk about the technical analysis here. So as you can see on Microsoft, it's been, again, like every other stock, on a great bullish trend since starting of April. It's moved from at least 150 all the way to close 200, hitting all-time high. And there's no sign of slowing down, but the momentum is starting to slow down. The bullish trend is starting to slow down. It's not showing any bearish indicator, but the bullish trend is starting to slow down. Fund managers has confirmed they've been taking profits, not fully, they've been scraping profits off the table, just potentially for a lower buy-in. As you can see on my trend line, I use the gradient style trend line. As you can see, the gradient, you can see it's starting to creep downwards, it's starting to fall, but it's still on a bullish trend. The moving day average and the trending still show it's on a bullish climate. So it's showing signs of slowing down. So it's still bullish but slowing down. So you have to catch it on the dips. You have to capture on the dips. At the moment, it's going dip 100 from 200 drop to 196. Potentially, it could drop to 190. So catch Microsoft when it dips. Microsoft is one easy one to buy. So something to buy and just stock up, buy and stock up, buy bits by bits every time that you can afford. So Microsoft, buy on the dip. Watch the candlestick. If there's a big dip, 1 day, 2 days, 3 days, you know, oh, Microsoft, long term. If they do dip 150, just buy 150. It's a long term one to hold. There's no brainer. Microsoft is a great company. Every fund manager loves Microsoft among all the grouping that I'm talking about here today. So the last one I'm going to speak about is Apple stocks. As you can see, Apple stocks among the lot are going on a great, steady, bullish trend. As you can see, straight trend line, simple. It's like a simple trend line. It's like trend line for dummies. Just draw a straight line. You can see it's just following the straight gradual line. And no gradient change. It's still going the same gradient. You know, sign of slowdown. It's going quite steady. There's no sign of slowing down. But you can see that swing. It's starting to go systematic swing. As you can see, every 4 weeks, you can see that boomerang, reverse boomerang swing on the candlestick every time, and it just goes back up, follows the gradient. So it still looks like it's following the gradient. No signs of reversal or slowing momentum. No ceiling yet. I don't know how high the ceiling is for Apple. Some reckon it's going to hit 400. Some reckon it's going to be the first 2 trillion pound company. It's at 1.6 trillion pound just now. It's close to hitting 2 trillion. Who knows? It might ceiling at 2 trillion. I wouldn't know. So Apple, you can buy on the trend. It's bullish just now. Personally, for me, I will hang fire. I will wait until they start breaking the trend line. I've monitored Apple for years, and there'll be days when they really hit the trend line, coming really, really down and break all fundamentals and go really, really low. For now, I've got Microsoft and Facebook and potentially Netflix to focus on. Apple, I'm not ready to buy it yet unless it's good value. So that's for me, that's for Apple. All of you might be thinking as well, why did I not speak about Amazon? So I've not spoken about Amazon yet. I will speak about Amazon perhaps in a video next time, but I thought this were the trends it was showing me. So I hope you enjoy and like this video, and I hope this helps you make the decision of what you need to do. Because at the end of the day, I'm not a professional financial advisor. I'm just a professional money maker for my household. So please do like, subscribe, share this video, follow me on Facebook if you want to know more on a daily basis of what I update, or if you're a super fan, support me on Patreon. And hope to see you soon in the next video, and leave a comment below, and thank you very much for your time. Bye.